Hey guys, Matt Strickland here. Just wanted to talk to you real quick. Just got an email. I follow like all the federal housing and all the rules and regulation trends. And one thing I've been talking about for, I don't know, maybe like the past year or more, is a lot of people ask me, like, what do you think about the market? What do you think about rates? What do you think about supply and demand? All that stuff, what's going to happen? I came back with the same answer every time. And I was like, yeah, I can give you all these stats and details, but I don't think it's going to matter, because they're just going to extend out our payments. And they're going to be like, what do you mean? Well, if you think about it, you look around and you see, your friends or people driving down the road, these brand new $100,000, 5.8 diesel trucks that I'm like, how do they afford that? Well, the answer is the 3-year car loan is a thing of the past, and the 5-year loan came, that's a thing of the past. Now you can get an 8-year car loan. So they keep extending out your payment. So as long as you can afford the monthly payment, your purchasing power goes up. Well, today, March 31st, 2022, can't even talk, I'm so excited. The Federal Housing Authority put out a docket saying they are going to start accepting public comment on a 40-year loan modification. And I have been saying that for over a year, that the 40-year loan was coming. It's already in the non-QM, investor world. You could do a 10-year interest only that converted into a 30-year at the end of the 10 years. Well, can't make your payment or struggling or need to reduce it. It's not exactly clear like all the rules yet, but they're taking public comment on it. But basically not a purchase. You can't do the purchase yet, but that's coming, and that's how we're going to keep these prices up. You can modify your loan with your mortgagee, meaning your lender, the bank or, whatever. They can change the contract to extend out your loan to 40 years to keep those payments down, to keep those default rates low. And it even talks about to reduce their mortgage insurance payouts, meaning, do they have the money? Do they print the money? What happens if everyone starts going to foreclosure and these mortgage insurances is backed by the federal government? It has to cover all the the losses. They're trying to mitigate those risks. So I found this super interesting that it came out today, and it drops tomorrow. The docket goes officially published tomorrow, which is April 1st, which is April Fool's Day. So I don't know if they're messing with us or what. But, super interesting stuff. This, in my opinion, is the first step towards the 40-year loans as a QM loan, as a qualified mortgage, where you can afford more by keeping those payments down. Now, from the investor standpoint, like, what does that mean? I'm interested to see it, like what the rates, what the numbers look like, because obviously lower payment would be more cash flow in your pocket. You buy a bigger building. It's interesting, kind of a double-edged sword for investors and the general public on their primary residences. So can't purchase yet. Can't even modify yet, but the docket is out there starting tomorrow. I'll drop the link to the actual official so you can read up on it. Let me know your comments. If you got questions, shoot them to me. This is super funny because I was talking about this morning on Facebook with some people. They were asking me, like, what's going to happen? And literally I was like, don't worry, you're just going to be able to extend out your mortgage. And then here we are this afternoon, and it actually hit. So good news, bad news, you tell me what you think. Thanks, guys.